Hey everyone, welcome back into our latest Cannabis in 5. I'm your host, Shad Dales, and today we're going to unpack a headline that has been creating a buzz in the cannabis industry, but we're also going to take a step back and look at it through a practical lens. What is it? Well, President Donald Trump signed an executive order on what's being called fair access to banking. On paper, it's meant to ensure that banks and credit unions don't deny services to lawful businesses for political or ideological reasons. And as you might expect, cannabis investors are already wondering, could this be the start of mainstream cannabis banking? Could this be the policy breakthrough everyone's been waiting for? And we're also hearing that Congressman Dave Joyce is preparing to refile the Safer Banking Act, potentially using this executive order as part of the political framing. And of course, rescheduling, it remains on the horizon. So a lot of moving parts here. Let's break it all down step by step and see what's real, what's not, and how you can position yourself without getting swept away by all this hype. So with that, let's get into it. First, let's talk about the executive order itself. President Trump's directive tells federal banking regulators to stop using reputational risk as a reason to block lawful businesses from opening or keeping accounts. It also requires agencies to investigate cases where access may have been denied for political or religious reasons. So this is not a cannabis-specific order, it's about lawful industries. But historically, cannabis banking has been affected by this reputational risk factor, that soft, subjective reason banks could cite to avoid servicing the sector. By removing that from the regulatory playbook, banks may be a little more willing to keep conversations going with cannabis businesses that are legal at the state level. But here's where we stay grounded. The Controlled Substances Act still classifies cannabis as a Schedule I drug. That means federally, cannabis remains illegal. The FinCEN guidance from 2014 still treats cannabis as a high-risk sector. Banks that work with cannabis must still file extra reports, follow strict due diligence, and assume heightened compliance costs. So while this order changes one barrier, the reputational one, it doesn't remove the legal and regulatory barriers. Those still require congressional action or a major shift through rescheduling. That's why it's important not to mistake this for an instant green light. And that's really where the Safer Banking then comes in. Congressman Dave Joyce has indicated he plans to refile Safer Banking Act soon. This legislation would give banks a clear legal safe harbor to serve as state legal cannabis without fear of federal penalties. If, and I mean if, the executive order is about tone and removing subjective bias, Safer Banking is about statute and providing hard legal protection. And here's the interesting part, the political timing. Joyce could frame Safer Banking as aligned with Trump's executive order, saying, quote, let's take this principle of fair access and make it law for cannabis too, end quote. If those two pieces move together, the executive order shaping regulatory attitude and Safer providing the statutory shield, that would be the first time the cannabis sector had both tone from the top and legal cover at the same time. And then there's the third piece, which is rescheduling. If cannabis moves from Schedule I to Schedule III, it will remove 280E from the tax code for state legal operators, improving cash flow and margins overnight. It would also likely trigger an update to federal guidance, including FinCEN memos, which could make banks more comfortable. A lot of moving parts there. But in other words, rescheduling does change the economics and the perceived risk profile, making Safer Banking an even easier sell. So taken together, you look at executive order, changes regulatory tone, and removes reputational risk. There's also Safer Banking. It creates statutory legal protection. Then there's the rescheduling process. It improves economics and further reduces perceived risk. When we look at all this, let's be honest with ourselves here though. Cannabis investors have been through this before. We've seen big political headlines that send stocks flying, only to watch them give it all back when the actual policy change turned out to be slower and smaller than expected. Oh, we know that story. That's why this moment calls for a practical approach. And with that, here's what that means. View this executive order as one step in a sequence, not the finish line. Also, recognize that Safer Banking still needs to pass both chambers of Congress, and we've seen similar bills stall before. Also understand that rescheduling is still a process, with its own hearings, public comment periods, and potential delays. But we keep hearing there could be an executive order pertaining to that. So really the opportunity here, it's real, but so are timelines. So when we look at that, here in the short term, the executive order could make compliance discussions discussions with banks a little easier. You might see some regional banks dip a toe in, especially if they already have high-risk sectors, and service them. Then there's long-term. If safer banking passes and rescheduling follows, you could see mainstream institutions finally offering services, not just deposit accounts, but loans, merchant processing, and insurance. That would change the capital landscape for the entire sector. But with that, there's still risk worth watching. There's obviously Congress, and will this get enough support from both sides of the chamber to get a floor vote in the Senate to pass safer banking? There's also rescheduling. Could it happen short-term? Could it happen long-term? The DEA could slow walk the process, or the final rule could create FDA oversight complications. Then there's market reaction. Over-optimism could drive stock volatility disconnected from actual fundamentals. That's why operators and investors should prepare for opportunity, but not bet on speed, if that makes sense. So really, if you're an operator and you're running a cannabis business, get your compliance house in order. Banks entering the sector will choose partners with the cleanest records. Also, prepare your bank readiness package, licensing documents, tax records, ownership structure, and seed-to-sale tracking and cash controls. There's also building relationships. You should do that now with regional banks and credit unions, even if they're hesitant. When they expand, they'll obviously be on your radar. And if you're investing in the space, you need to look at track policy sequencing, not just headlines. Watch how the executive order implementation plays out, then whether SAFER actually gets the floor time. Focus on operators with strong compliance cultures. They'll benefit first if banking access expands. Also, model your scenarios around 280E relief and potential cost of capital improvements, but keep conservative timelines right now. The bottom line, the executive order is a meaningful signal, especially for an industry that's been boxed out of mainstream banking for years. But it's just one piece of a bigger puzzle. If paired with safer banking and rescheduling, it could mark a major turning point. But without those follow-through moves, it's more of a tone-setting gesture than a structural change. Yes, there is optimism building, but let's look at this practical. So for cannabis investors, the smartest move right now is to be informed, be patient, and be ready without overcommitting on the basis of one headline. And that is the reality right now. For now, I'm your host, Shad Dales. This has been the latest Cannabis in 5. Let us know your feedback and comments and what you thought this announcement's made this week. Leave your comments below, and as usual, if you like this breakdown, make sure to like, subscribe, and smash on that bell for all notifications. Until next time, take care, everyone. I'm your host, Shad Dales, and thanks again for watching.